Good evening. Ira Epstein with your Metal Market Wrap-Up. And this wrap-up is for Wednesday, the 25th of May, 2022. We had tornado warnings 10 minutes ago in the Chicago area. They're gone, and it's 80 degrees again and beautiful. But I love when that comes on. Everybody goes running, and they break into all the news stories to show you. It's rare that a tornado hits the city of Chicago, but yes, our suburbs can get hit. The lake effect, living on a big lake, changes the trajectory of it. Okay, what about the trajectory of the stock market? Well, there are just so many people trying to fish for a bottom. I watch all day long CNBC and Bloomberg. Every now and then I'll watch Fox as well. And I'm looking to see what are the traders saying. The individual stocks are more talking about on CNBC. The general markets are talked about more on Bloomberg, and it's more of a mixture of a little bit of everything on Fox, okay? Everybody's got a different way of doing it to attract an audience. But for whatever reason, so many traders are looking, number one, for this to be a low in the stock market. I'm amazed at how many. That we've peaked already in interest rates. Okay. Now, let me just make my story to it. I don't generally see a bear market end this way. I've not seen capitulation. That bothers me. You know, you haven't gotten the VIX up to the point in the fear index where people are crying uncle. That generally is how it's done. Could this just be a glide path that does it? Different things happen, you know. We've had an awful lot of these type of reactions over the years. It could be, but I doubt it. The next thing I look at is interest rates. Has the Fed reached its goal? Why do people think the Fed's done so early? They've got to get ahead of inflation. What do you think inflation's running at? Is it 4%, 3.5%, 5%? They've got to get at least to it, if not ahead of it, to get to what's called neutral. They're nowhere near it. Now, I understand it's going to be the combination of what they're doing now and then inflation slipping back with this hand, rotating back to the downside. As they're coming up, that's coming down, and ever the two meet. Is it a 3% number? It could be. I don't think it's 2% anytime soon. I don't think you expect that either. I was surprised today to see Toll Brothers and other housing builders do real well. I didn't see that. I mean, if you looked at new home sales, they're terrible. But they're able, for the ones there, to take the price up. They're able to pass on a lot of their costs. They've done some things right where the costs aren't as much, but they can mark them to the current market, and they've done well. Okay, but how much inventory they have to do that? Remember, it's called new home building, and that gets expensive. But coming to the metals where we're at, what do we do with this? So let's look at the charts. First, the 18-week moving average of closes, when I look at a chart, is the demarcation point. Above it, I am bullish as a bias. Below it, I am bearish as a bias. I filter my other indicators. I put 5 indicators on a chart. I don't know if you realize that. We're going to put a swing line indicator on. We're going to put moving averages. We're going to put window envelopes, which I don't show here. We're going to then put on Bollinger Bands and slow stochastics. Got that? 5. If you think you can master the 5, you have a trading program. That's what I believe. And then I enhance it. I have my enhanced Bollinger Bands. I get away from the normal. I make some changes. You know that my Bollinger Bands on this look different than yours by a little bit. It's because I've altered the program. John Bollinger does the same on different programs that he has. So he created the standard one, and then we tweak them. It's so simple to do it on all your software. I tell my paid subscribers what to do, so they can do that themselves. But in the gold, we've had this rally going on, and the rally has been, if you will, clear on the sense of higher lows, higher highs. You certainly ended this decline. The question was, is it the start of something big or not? What it did is it rallied, and I can show it to you, okay? First, it got to the 200-week average, fought a battle there for a little bit. If it goes further, then you open the door for the 18. 18-day average, what I call that, that line in the sand, for lack of a better word, that's where markets often stop and play around. Do you see that? If you don't agree with me, that's fine. But that's what this market is doing. I don't know that the market's turned into an all-out buy. If you buy it here, the real swing line low is back here, and I think it's a little too much risk. It's around the 1830 level. But the targets to the upside are clear. You have one of them at the 100-day average at 1888.40, and the Bollinger Band is right by that at 1889.80. Who has control? Right now, the bulls. That is the potential. Take this out, and the game switches on you instantly. It doesn't turn bearish. It loses this bullishness on the current pattern. Slow stochastics turning up. I think you'd agree with that. So you can see the picture that I've laid out for you there. The gold-silver ratio, silver for the first time is getting to the other side of the red line, which is the 18-day average of closes. That means the bias is changing on the ratio. When the bias changes, that means you're suddenly getting bullish silver, bearish gold. When the numbers go up, these are how many ounces of gold in a perfect world, how many ounces of silver, I take that back, in a perfect world, you could bring to a store void of commission or anything. You put them in that, when you go to the grocery store, you steal one of the carts, you put in all your silver, you go down the street, you push it to the guy that's next door, he happens to have a gold-silver store, you bring it in, and I hope you're honest, you bring the cart back, and you get your ounce of gold. So as silver goes up in value, that number goes down. All right. Then we get to the COMEX silver, and this is the big size contract, and this market to me is acting bullish, more bullish than the gold. The market's hovered a number of days at the 18-day average. If, there's a big if it can resolve itself, I think it gets itself up to this 2275 level. Momentum is up. The market has now spent a couple of days over the 18-day average, unlike what gold has done. Gold, if you'll take a look, if I come back here, got up and immediately back under and back up. So I look at that and I say, okay, can the market stay up like that? That's one of the things I'm always looking at. And it's holding this 18-day average. Today, I was telling traders I think that the market's a go signal if it can hold that on the long side. You don't want to see it under 2164, and you're looking to get back up to the 2275 level. The upper Bollinger Band is one of the numbers for an objective. In the slow stochastics of copper, I've got it in here twice, I'm sorry. The battleground's right here. The market is in the bull phase. The market is getting close to being overbought. Any reading that you get that's over 70 is overbought. You're at 71 tonight. I don't tell traders to ever buy an overbought market. So, no, I think you got to walk away from it, but I'm friendly to the market. In the platinum, I don't see a trend. Higher high, lower low, nothing there. And in the palladium, it's been a bear market rally, and no more than that. It's not trending. You have a higher high. You got a lower low. I don't know what to do with something like that. And in the dollar over the past 48 hours, sorry about that, the market got down to the lower Bollinger Band, which is exactly what I teach, where if you've been short, and short's been the way to be, that was where I thought the pros would take money off the table. Now, how many indicators do you see me using here? I use a total of 5. You see 4 of them. In moving averages, you don't get all the averages I use. I use more and I teach it. But you do see the swing lines. You do see moving averages. There's another one I use in the charting course, and it's very important. In the slow stochastics, you're seeing them, and you're seeing them in a neat way. I use them just this way. My numbers will be slightly different than yours. Bollinger Bands, and then we get to the window envelope that you don't see here. 5 things. You think you can master 5 indicators? If you think you can, I can teach you my charting technique, and I can do it 8 hours. That's 8 hours of video. That's not 8 hours to learn it. Let's assume you take those 8 hours and you put in an hour a day. I say that within 2 weeks, you will learn what I've done. Don't race, learn. There's a big difference. You know, I went to college, you went to school, be it high school, college, grad schools, I went to law school, it doesn't matter. If you turn the page and you don't know what you've just read, you didn't learn a damn thing. It took me until I'm going to say my junior year in college to get it. And I became a Dean's List student right away. I didn't get it the other way. I was racing through it. Turn it. I'm done studying. Once I learned that, be it my licenses as futures broker, stockbroker, I've done everything with the licenses. It's the same thing. I don't turn the page till I get it. And once I get it, I can do a review, but I've already got it. And that's the key. So the way that I teach, everything builds on each other. It's not a story to get to the end for the conclusion. Each chapter's the conclusion. Does that make sense? I hope it does to you. And the way that I teach is I'll create a PowerPoint. Then I'm going to take you into older chart data. It's a video. It has to be older data. So I'm going to show you that data, and I give you the charting software, and I give you the data, and you get all the indicators, and you plot them one at a time. I even make you draw a swing line by hand. If you can't draw it, you don't get it. And you can draw it right with the charting software. Guess what? At the end of this 2-week period, you're going to go, darn it. And it's going to stick with you. It's not going away. It's going to stick. Then after it, I create your grad level courses, like my enhanced Bollinger Band, and now I'm doing outside days to teach you another thing to work with. This is not expensive. It's not supposed to break the house. It's not where you got to say to your spouse, hey, I'm going to do this. It's going to take some money. No, that is not what this is about. It's inexpensive. And from that, the idea there is to give you a trading discipline, one that I'm going to filter with you each morning, because you're going to get my morning subscriber videos as part of the course. You learn. I reinforce. You learn. And I'm always mentioning, hey, you new students, look at this, look at that. I'm making sure you learn. You can write us, ask us questions. We're prepared to answer. Every one of my brokers has been taught by me on this. They're ever learning and learning. We don't alter the course, I must tell you. The course stays pretty much the way it is. I do the enhanced courses as I learn how to make whatever I've taught even better. So to find out more, simple. Just go to our website, www.iraepstein.com, under the word education. If that's too difficult, take your cursor, move it to the top here, and you can do it that way. It's pretty simple. I think it's going to be an event changer for you. I'm Ira. You have a good day.